The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you're having a good Friday morning. You ready for the weekend?
Hi guys, I think we're back. And what I was saying is, the September 2nd labor report that's coming out, we're going to have to pay attention to that. That's going to be kind of confirming. But if there's just an off-kilter number that comes out, they're like a turtle. They just might draw back in and say, God, oh my God, it's not perfect. We can't raise rates yet. So, how long have they been talking about this? Since last year? Hadn't happened. So let's talk about something important first. Let's talk about this bean trade. And here's the November beans, new crop beans. And here's the, and I've got to restart this. Hold on just a second, guys. Had a connection issue there. Reposting my charts right now. Bear with me, please. All right, we should be getting back up here. Here we go. So what I was trying to show you, this is the weekly view on the new crop beans. And the reason I'm bringing this up is a couple of reasons. One of them is we only show trades that work out. I'm just kidding. We were talking about, the long-term view, kind of getting back up into this 1017 area. And you got to give yourself a little bit of noise when you have these wide profiles. We had a profile edge down. But again, we were talking about leveraging off that 1017 area. And we also talked about the targets down below, which initially, and I'm going to drill down into the daily. We're going to pop this up really quick. Well, seem to be having some problems with these. Okay, here we go. We're going to look at our daily chart. And we talked about the first targets were going to be 973 down below. As you can see, take a hard look at these inflection points. And again, this is really, really interesting when we get up into these major inflection points and can really play defense against them. And then, we're offered some targets a lot of times. There's another target down below about 964. But again, this is kind of your first area to really start taking some off the table. So now we've reached our targets on the bean trade. Might have a little more juice left in it, about 10 cents a bushel. So just wanted to point that out. Might have a little bit left in it. Again, 964 could be in order here. And I am having some issues with the charts this morning, guys. Sorry. Not going to be as fast. That's not a bad thing. So that's the situation on beans. And as you can see, we're bouncing a little bit up. Yeah, a couple of cents a bushel off of that 973 area. I think we reached a low of 972. So nice little trade, nice little setup to happen, letting the market come back to us. And a lot of times, when you look at this, it's like, what do you do with this down here? This is the powerful trade when we kind of break below profiles and then go back and retrace up into it. I mean, I know this took weeks to develop like that, but sometimes not trading is a trade in itself. Here's the crude trade. Now, this 4806 is going to be a big number up top. We've talked about the numbers down below 4485, just smack dab in the middle of this right now. There's really no leverage. So kind of like the bean trade, just kind of a wait and see on that particular instrument. The S&Ps, again, the rhetoric, you got to just kind of sit tight. I don't think, and when you look at this, we've talked about this not really breaking down on the internals within the scanner. This is still kind of spinning around near the highs, not really wanting to come off. And a lot of times these things will really move up before they move down. So you got to kind of be prepared for that. And I'm sure she's going to, I'm sure she's not going to say anything too disturbing as usual and leave it open on both sides of the fence there. So she's not going to pull a Greenspan. Remember when he did that? Irrational exuberance. God, I remember the day. 10-year, 132, still the base on that, still loving it. And yes, Paul, we will put that in the scanner. Got a request to put it. Can you email that to me? Yeah, that was crazy, huh? Let's take a look at a couple of the usual suspects before we go to the first break. The dollar, still like this only from the long side. And again, this is kind of a longer term bounce to me, playing defense below this 94. Remember, if we start talking about raising rates, this thing's going to be at 95.20 in about a blip. And then could be looking at 97.16. So again, got to wait and see on this one. Leverage is towards the long side. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, we're finishing up with some futures contracts that we normally track on the first segment. And if I get a little long-winded on some of those, you guys are like, okay, Logan, let's move on. Just hit me in the den. Tell me to speed it up. But, you know, I really like these longer-term setups a lot better than the shorter term. That's just the way I like to trade. You guys out there who are trading on a shorter-term basis, there's some super value to be had looking at some of the shorter-term levels. And these 240s are, I rarely go into the 60s. A lot of people use those for, you know, serious day trading situations, but again, maybe it's just me. This is kind of my style at this stage, and I'd rather personally look across a lot of instruments at one time and wait for longer term setups. That's why I love the scanner, because it kind of lets me not have all my eggs in one basket all the time, not get glued into trading the S&Ps constantly with a 5-minute set of indicators. That's just not me these days. And I like to trade a lot lighter amounts of shares and kind of, you know, spread it out a little bit. So that's why I was kind of focused on that bean trade, because it was, you know, you just got to wait. And when it happens, you got to be ready. You got to have the powder dry too. A lot of times when you get those nice longer term setups. This Shanghai trade has been a little annoying. It's gone a little bit deeper into the profile than I thought it should have, but we're still kind of closing right at the unfair highs here. That's going to be, if this thing catches fire now, and that, you know, may or may not happen, but looks kind of good. You know, that's going to also kind of bode well for U.S. markets. Like, oh God, everything's going to be okay, and Yellen's, you know, not crippled us with any rhetoric. So taking a look at the DAX too, just taking a look across some of the global instruments. I'm not so sure that this is at a state where it could rally also, but again, you know, breakouts on the DAX, confirmed breakouts above profiles will be above 10,744. But again, I mean, I'd have to, this is kind of like annoying, like the gold trade around that 1347. And gold finally broke down a little bit, but 10,566 unfair lows on the daily profiles on the DAX. Taking a look at the Nikkei. Hadn't talked about this in a while. Here's the long term on the Nikkei, just kind of resting down here. That yen trade has kind of crippled that a little bit. And let's take a look at the yen. Let me pull up our currency server here. And here we go. Okay, the yen trade kind of stagnating down here, and this was kind of the little scary situation that I was talking about in the yen trade, just not really wanting to get away from these unfair lows. If we spin around down here like we're doing now, you know, we could have another flush. That means the valuation of the yen and the Nikkei could kind of follow suit there on the downside. So, you know, just be prepared for that. And it's not looking that rosy. Aussie dollar. Love this trade on the long side. I like support at 75.87. We've hit that a couple of times. We've hit the targets up top and backed off, but I think we could easily shoot for 77.46 and higher. So that's kind of the way I'm looking at it. We're kind of getting away from those inflection points now. So I think you still got a decent risk reward playing defense below 75.87 on the Aussie dollar trade. The British pound. Staying above that 130.19. The long-term targets on the pound are that 136.81 up top. And if you've kind of been reading some of the numbers coming out from Great Britain, people are kind of just, as far as sentiment goes, they're just kind of like now just throwing this Brexit thing out the window. Some of the numbers have climbed, sentiment numbers and real numbers. And, you know, we could really be seeing a floor in the pound right now. And 136.81 would be the complete exploration of the unfair highs and the fair auction on the weekly. And then it would be a chance to really start looking at this from a possible, you know, okay, we've reached our targets, and let's possibly reverse the position for a trading opportunity with again, defense above. Euro, nothing much to talk about there. I'm still pretty bearish on this thing. And remember, again, going back to Yellen speaking, if she starts talking, you know, rate-ish, hike-ish, dollar's going to rally. This thing could be selling off. Your breakdown points on the euro would be, and we got a nice little bounce there off of that inflection point, 112.48.49. Breakdowns below 112.48.49 would be, you know, kind of confirming some breakdown finally on the daily on the currencies. Let's go back. Let's look at a couple of stocks from yesterday. Let's look at Disney. And, you know, we've talked about this, you know, kind of acting weak when the market starts getting weak. It's been something that we've been, you know, talking about. There is obviously something wrong here. And it's now trading pretty significantly, not significantly, but pretty, as far as how many weekly closes we've had below here, below this 96.89 area. And again, you know, if you're going to be shorting stocks, you want to be picking out stocks that are just kind of sitting on the edge of the cliff. This looks like one of them. And we're also going to look at McDonald's while we're looking at similar setups again. A little bit of a bounce yesterday, but again, I like how this thing's kind of spinning around down here. Again, after we've, again, closed below, look back and retest. Not exactly like that bean trade, but kind of, you know, same vein. And I'm looking for this to actually head lower. Let's take a look at Facebook really quick. All right, so the new profile this week, the numbers again, 126.32 above and 120.29 down below. Those are kind of the areas you got to pick battles for this thing. This is obviously not a weak stock. So if you get any pullbacks to 120.29, you got to be looking at that as a buy support type situation on Facebook. Netflix. Let's wait till our daily pops up here. Okay, so Netflix, you know, it's been kind of hovering around these unfair highs around 96.18. You know, it's kind of made lower highs along the way down since springtime. Actually, geez, since December last year. So what do you do with Netflix right now? I think you got better longs out there. And if the market starts coming off and, you know, whatever reactions to Yellen, you can have that both ways. Netflix getting below 96 and a half, 96. It's going to be looking at this as a short opportunity. All right, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Pulling up the daily indices profile heat grid. We talked about Columbia yesterday. I want to show you something. Not too many stocks in this index, but, you know, pretty good sea of green here. And want to just point out, you know, we pretty much reached up into that. Even yesterday reached a little bit higher. 1380.41. Again, we talked about this, not shorting against these weekly unfair highs. But you know, you might say, wow, this thing has, you know, moved pretty quickly, violently. I actually think it can go higher. So when we get up into this area, this is not an area to be shorting, in my opinion, 1380. A lot of people don't look at this index, but I mean, this is one where, you know, liquidity's not tremendous on these things. And when they get going one way, they can just keep going. So just keep that in mind when you're looking at Colombia right now. All right. On that same vein, when we look at the S&Ps and look at the internals, you know, some people, you know, really like to roll the dice before announcements, before earnings, before labor market statistics, the whole 9 yards. I personally don't like to do that. And, you know, some of the things that, and I hope we can have Steve Banger on in just a little bit. I wanted to chat about some macro, you know, things that are churning, especially after this woman kind of starts, you know, doing her thing at 10 o'clock. So I'm hoping we can get Steve on sooner than later. I wanted to chat with him. He's always got an incredible good macro view on what if scenarios on the, when we're talking about rates. So, yep, confirmed. I think we're going to have him on in a little bit. Let's take a look at Alcoa. This is one, and I'm just going to pull this up right in eSignal. But first, let's hit the XLU, and then we're going to hit Alcoa. This is one, obviously, a sector that can have some volatility. When we start talking about rates, you guys know that that kind of thirst for yield with utilities and dividends and things like that, you know, reacts 10-year, 30-year, you know, what's the payback on parking money in so-called safe instruments. So, again, this is another example like the bean trade of wait until these things come into these long-term inflection points. We bounced right off of this in the XLU ETF, 49.37, but I don't know, you know, I don't know if this is going to hold. So, but if you're going to kind of play this game, you've got a chance to play decent defense down there. Remember, higher rates, even a quarter point, could cause this thing to sink a little bit. All right, let's take a look at Alcoa. I think we've got Steve Banger on. Steve, are you there?
Morning, John. I'm here, bright and
Hey,
early.
buddy. How are you?
Beautiful day. That's all I can say.
In Chicago.
I know.
How's what's just to get right into it? What do you think the different sides of the fence that can happen here? You know what? You know, Yellen talking. You know, the dovish comments. Maybe she's going to talk about deeper convictions on raising rates. You can look at it a lot of different ways on what the market would do. But what are your thoughts on, you know, both sides of the fence there?
Well, I mean, actually, I think it pays to go back about 4 to 6 or 8 weeks, where the chance that we're going to see a rate hike this year were basically 1 out of 10, 1 out of 15, rather minimal. And now the market is currently pricing in the chance for a Fed hike at the September meeting of about 1 to 3. So the chances of a rate hike have gone up quite a bit. And I think that has particularly shifted over the past week. So for once, I actually feel that her speech is somewhat significant, because if she falls into the same, well, I mean, obviously, usually there's a lot of hot air coming out of Jackson Hole, right? Let's face it. I mean,
I know.
It's
We want
it's
to
rather-
we want to always feel that it's going to be significant, but I hear what you're saying. I hear
Yeah.
what you're saying.
So I think she almost has to take a stand, because a guy like Buller came up this morning and he basically flat out mentions that he feels September is a good time to raise rates, and that is not priced into the market right now. So if Yellen follows his lead and also signals to the market that September is a good chance to raise rates, we might see some turbulences in the market.
So let's just focus on the S&Ps for a second. So the broad stock market, if she kind of has a little bit deeper rhetoric on the raise rate scenario, the market's been just feasting on low yields and loving it forever.
Yeah.
Do you think it'll take it as or do you think the market will take it as like, okay, there is some confirmation that, things are moving forward, and the market might take it initially as a little bit of a downer, but then rethink it and say, oh, wow, it's not a bad thing. There's some confirmations that the broad economy is doing okay.
Yeah.
What do you think the action's going to be?
Logic would dictate that is the case. So there might be an initial period of volatility, market trending down, and then recovering and go back up. Because in reality, it is a sign that we're back to normalization. The only issue I have is that after the last rate hike, the market went into a nosedive and really took it on the chin. So,
You mean the crushing blow of a quarter-point rate hike? You mean that?
Yeah. I mean, the market completely over-exaggerated, right?
Right.
So that is the one thing I would be leery of. I think the reaction might be much bigger than some people expect, and it shouldn't be.
Right.
But that's besides the point, right?
That being said, how do we make money? I mean, you talked about the volatility play. Is that still there? Even has anything increased? Has anything started expanding? As we got.
I mean, if you look at it, right? I mean, so I think I came on about, let's say, a week ago or 10 days ago. I said I would really be long volatility at those levels, and since then the market has failed to make a new high. Volatility has trended up a little bit, not much. I mean, not enough to turn that position into a significant profit. It might be up a couple of basis points right now.
Your version of a significant profit. Your version of a significant profit is like 1,000 to 1, though. But what's a normal human being's version of decent profit? Is it started churning out? Because you've had some huge winners I've watched. What are we? Or is it kind of starting to edge into profitability now?
Yes, a little
Already?
bit, but I mean, I'm talking about perhaps like 5 or 10%. But in options, that's really nothing, right? Because one adverse move is going to take that away.
Right.
So my version of a significant profit adjusted for the option market is that you have to at least double your money or triple your money in any of those trades.
Right. Can you hang around after the break?
Sure.
Awesome. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And Steve Banger is with us this morning. Thank goodness. Steve, first of all, I wanted to, before we get back into it, man, you'd have no idea how much of a pleasure it is to speak to you on the air. And I think everybody else just, I don't see how it's possible not to get a lot out of what you're saying when we have you on.
Yeah, you should tell that to my daughter sometime, though, because she clearly doesn't care about what I say ever.
That's funny. We're taking a look at silver really quick, and gold's rallying a little bit this morning, but I'm kind of not really paying attention too much to gold because we're kind of in no man's land a little bit down here. But silver is defending this 1855-56 area pretty well. Poked its little head below there a little bit on the bottom of the profile, but I like how this thing's defending it, and gold making a little bit move up this morning has kind of helped it. But I like the silver trade because we're coming into this really serious inflection point. But while we're talking about gold and silver a little bit, Steve, what do you think could possibly be happening to the gold market based on some of the things we spoke of earlier, yelling being all over the place? Have any thoughts on that?
Yeah, obviously gold has pulled back. Not quite a bit, but gold has pulled back, and I think that is in line with an increase in the expectations that we're going to see a rate hike. So I think if we do get confirmation on a rate hike, gold is going to show some weakness.
All right. Just technically speaking, guys, I just want to show you this on the chart. We're literally kind of away from serious areas to pick battles. There's a POC on the weekly profile around 1331. We talked about that, but I'm a lot partial to trading at 1295.96 or getting long above 1347, Steve. So that's what I've been talking about. But yeah, if we get that shocking news, gold could implode, like you're saying, and 1295.96 is kind of where to catch that. Gold's just making a move right now while we're talking. So it's up a couple of dollars more.
I think what makes the current situation a little bit difficult to forecast is we are definitely in a tug of war. I just listened to Meister, one of the voting members of the Federal Reserve, president of the Cleveland Fed. She was speaking while you were on break. Mm-hmm. And she said that the Federal Reserve expects a significant acceleration in growth in the first half of 2017. Now, if that is truly the case, then gold is going to be supported because we're going to have some inflation battles coming up, right?
Mm-hmm. Yeah.
So it's a really messed up situation right now. We're really on the cusp of one thing or the other. It's tough, but what I will say is the stock market has been trending in such a narrow range for so long now, and we are right at historical highs, that it just looks to me that there might be this snap to the downside. I just don't see the stock market breaking convincingly into new all-time highs up on the news of a rate hike, if that's the case. And even if we don't get a rate hike, I don't think that fuels the fire to push the market higher, because all what happens is we extend the situation on the time axle, right? I mean,
Right.
even if we don't get in September, people are going to be, okay, perhaps we're going to get in December then. So the conversation is not going to go away. So I think all the risks are to the downside and against, let's call it, the medium-term trends. And in gold, I think that's the same situation, right? Gold has been trending up since early 2016. It has pulled back now, and the risk is really, it's really against that trend.
Well, there's no free lunch out there, and a lot of times I kind of agree that, we're kind of in a tug of war, no man's land. But, like you said, if they have this, kind of more confirming rhetoric, then, market could take it in the short term kind of on the chin a little bit, just because the free lunch is over for the free money type thing. And ricochet down, clean some people out, and then reverse, based on some of the things we said earlier. But yeah, I mean, it's a weird situation, to say the least. And it's almost like, is it worth it to even be in the market right now? Because there's just so many things that could happen, actually.
Yeah, I mean, it's worth it to be on a short bias. I think that is where the opportunity is right now.
Okay.
From my perspective. Like longer-term short, I think between now and the end of the year, something is going to break. And I just want to talk about...
Which is perfect opportunity on the trade that you've been talking about, which is the long volatility trade. I mean, that's the only trade out there, really,
Yeah, I mean, who knows?
One of the
I'm sure there are smarter people than you and I who come up with smarter trades, of course, but...
without question.
Yeah, of course. But I just want to mention one thing, John. And because I feel that is something which always gets lost in the conversation. The market for the past, let's say, 2 or 3 years, ever since free money or easy money came around, at least partially is being driven by very low financing rates on any type of asset, whether that's the broker call rate, which is next to nothing, just outright borrowing by funds which are able to borrow against existing assets. And the financing rate is next to nothing, because the Fed fund rate right now is trading at 30 basis points or so. So when the Federal Reserve increases the rate from the existing level by 25 basis points, the funding costs for any of those institutions double overnight. And that is a very significant factor when they calculate the cost of carry for their trades. So even though it's only a quarter-point rate hike for the actual underlying economy, which is meaningless for most, let's call it real businesses, like in the financial arena for people who use significant amounts of leverage, that quarter-point rate hike is very, very significant in their funding costs. And just to put it in perspective, let's say you have an asset and you borrow at a rate of 8-to-1 against that asset. So your funding cost against the underlying asset is perhaps 4% and a quarter point, right?
Yep.
Does that make sense?
Yes.
So if the Federal Reserve basically doubles the Fed fund rate with the next rate hike, that funding cost against the underlying asset goes up to 8%. So, and that leads to the trimming of position exposures for some of the huge players in the market who rely on huge leverage to churn out basis points. And that is why volatility might come in rather quickly, despite the underlying rate hike being rather meaningless to the overall economy.
Right.
And that is something which a lot of people don't really consider when they talk about those things. Yes, the quarter-point rate hike is meaningless in the bigger scheme of things when you're running General Electric, because it really shouldn't matter to you. But for a lot of financial institutions which run huge leverage portfolios and which are only secured by 1/10 of the underlying asset, it is a very significant number.
Very well said. We got one more break. We got like 5 minutes left on the show, but we got a break. Is it possible to hang on? Because I have some other questions.
Sure.
Awesome. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're lucky to have Steve Banger on with us this morning. And Steve, I got a couple of questions. I mean, you know, you and I have been in the broker's business, not in the broker's business, up in Chicago, just dealing with clearing firms in general. You used to own a clearing firm. You know, that kind of lockbox that the clearing firms have, you know, they can give you like all kinds of crazy low rates or whatever, but that spread is what they really, really make the money off of, as you know.
Yes.
The debit credit deal.
Yes.
And that's something they normally don't, like when you go to negotiate rates with them as a broker dealer or whatever, you know this. That's something they're generally not that flexible on. What is, you know, I mean, I've looked at the Ameritrades and the E-Trades of the world. How is a quarter-point rate hike, what would it do to those type of folks? Because, I mean, what's your thoughts on that?
Well,
because I mean, that's where they really can start. You know,
yeah.
The spread,
they're in the interest. They're in the spread business, right? So,
right.
Which
has been awful lately.
Yes, but you see, they're on the credit side of the spread. So in other words, they don't really borrow. It's their customers who are borrowing. So all what a clearing firm does, it kind of like charges the customer a certain spread on anything the customer carries, and then they increase that spread by a quarter percentage point if that is the number by which rates go up. So in theory, it shouldn't really expose them or impact them meaningful. Where it really makes a difference, though, is for more like proprietary institutions, which do their own borrowing, which have negotiated rates. That is where it really becomes an issue.
Right. So for guys out there shopping prop firm rates, they might give you almost free transactions, but look at the spreads. That's what you got to look at. The debit credit spreads.
Yeah, or the actual rate, right? So
yes. Yeah.
So I mean, that's really what it comes down to. But I mean, if you really think about it, where it really matters, where the change in rate matters, is in strategies where people fight for basis points or pips, where they cause like basis trades in the securities market, where the trade might only generate 15 basis points over the course of a year, but because the portfolio is levered at a ratio of, let's say, 20 to 1, it churns out 3%.
Right.
So these trades all of a sudden go away when the cost of carry increases by 25 basis points.
Right.
And the unwinding of these trades is what then causes gyrations in the market.
Correct. Which is kind of some of the things you were saying earlier.
Yes.
What do you think is going to happen? Let's say we got about a minute left. What the quarter point raise? Do the banks kind of love that, regardless of what the market's doing, or what are your thoughts on that one?
Oh yeah, the banks need it.
Yeah.
For sure.
Yeah.
I mean, the banks need it. I mean, and savers too. I mean, one of the issues the Federal Reserve has by now, and that is the change in tone, is that there's an acknowledgement on the Fed that low interest rates have created an unstable financial environment because too many savers who are not getting any money out of their savings have been forced into the risk curve to invest in assets they would normally not invest in. I'm sure some of your viewers are in the same boat. They don't, because I am. I mean, I don't get anything on any of the cash I have, right? So what do I do? You try to find things which are more risky, but which at least pay a couple of dollars. And if that goes the other way, huge instability in the system.
Steve, complete pleasure to have you on. My friend, I'll talk to you later today. Guys,
always, John.
Stay tuned for Larry. Thank you so much. Stay tuned for Larry.
Okay, bye-bye.
You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.